And I think it's really important and incumbent upon all senior Bitcoiners or people who've been in it a while and they're trying to orange pill their friends to explain to their friends what this asset is and how volatile it is in these early days of adoption. And the only way, as you and I both know, the only way you really get hurt in Bitcoin is to chase a new price high, to then have it go over the top of the cliff and go down, 20, 30, 50, in worst case, 70 or 80%. But I don't think we'll see many of those anymore. But 50% down seems entirely doable to me from any level, really. I suspect, in this run, it's going to go to 200, 250 sometime in the next year and a half. And then, by the way, it'll get overextended and it'll come back down to 125, lose half its value. One thing that has happened, and I think it'll continue to happen as it's more widely adopted, is that the fluctuations will not be as large. In the early days, I think there was one drawdown that was almost 90%.
The collapse of the stock market might just be the catalyst that sends Bitcoin soaring to an unimaginable $1 million. In the midst of traditional financial chaos, Lawrence Lepard presents a bold vision. Once dismissed for its volatility, Bitcoin is now on the verge of becoming the world's most powerful and stable asset. What seems like madness today could lay the groundwork for tomorrow's financial revolution. Bitcoin's price swings have long been a point of contention, but according to Lepard, these fluctuations signal an upcoming transformation. He warns against the common mistake of chasing quick profits only to face inevitable crashes. However, Lepard doesn't foresee continuous crashes. Instead, he predicts that while Bitcoin may experience dips of up to 50%, it's poised to reach new heights, potentially hitting $200,000 to $250,000 within the next 18 months, followed by a short-term correction. What's truly exciting is that as Bitcoin's adoption spreads, its volatility will decrease, paving the way for a smoother, yet far more explosive rise. The reality is, Bitcoin's journey to $1 million is not a fantasy, but a logical outcome driven by its growing influence, the collapse of outdated financial systems, and the dawn of a new economic era.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I think the average person, the average investor, I still encounter this a great deal, feels like stocks are the place to be. They know we live in an inflationary world, and the way you hedge that is stocks. And stocks have slightly outperformed gold over long periods of time. And stocks do represent claims on businesses that throw off, earnings and dividends. And so the stocks aren't bad per se when they're appropriately priced relative to what you're buying. The problem is that the stock market right now is at, historic highs on any metric you want to use, the Buffett indicator, whatever. It looks like 2000 or 1929. And so you're not getting everyone's in that stock bet already. They've already made that bet. And so there's not, it's fully priced, in my opinion. There's not a lot of upside in it. And I think what happened in 2020 and changed is that we went from a 40-year period of deflation where, interest rates were coming down, driven by a lot of things, driven by all Jeff Booth's stuff about technology and so on and so forth, and the China price. But we went from that period and it got ridiculous. we had $18 trillion of negative yielding bonds. That's about as deflationary as you can get when you have to pay somebody to hold, to hold your money. Come on. So that it was just extreme, right? The 10-year was at 50 basis points in, March of 2020. So bottom line is that reversed, in my opinion, violently, when we had the COVID event and the 40% growth in the money supply. And so, and history shows that you really can't put inflation back in the bottle very easily. That once it gets started, it kind of tends to continue because everybody wants their piece of it. A good example of this is, we're supposed to be aiming for a 2% target, right? Well, the dock workers, the longshoremen went out on strike last fall in October. They got a 6-year contract with a 60% increase in their wages. That's 10% a year for 6 years. All right. 10% a year for 6 years. So, that basically what that shows you is that when labor and how were they able to get that? They were able to get that, one, because they had a union, a lot of power. They fought all the automation of the ports, et cetera. But more importantly, they had just been screwed. They'd had a 40% increase in the money supply. And so suddenly whatever they were making bought 40% less goods and services. And so they were pissed and they had the power and they went and they demanded this higher rate. Well, Okay, that higher rate, fine, they get it, and I get it. I get why they got it. But the point is, that's going to flow through to every single piece of goods and services that comes through those ports. And it's locked in for 6 years. So, and 10% is a long way from 2%, the 10% annual increase they got. So the point is, we live in an inflationary environment now, in my opinion. And because of the math, and I've laid this out in detail in my book, and you know it, and Lynn Alden has done a great job laying it out as well, with her "nothing stops this train" meme on how the government spending is out of control. And we can get to Doge in a minute. But, because of the math, they really have to keep the system inflated and inflating, or else it collapses. I mean, it's like, inflate or die is kind of the mantra. Holding on to your coins makes sense. Putting it into the real estate makes no sense, right? Yeah.
Correct.
Yeah. No, I mean, my kids are in their 20s. They can't buy housing, and they're doing fine. They're making good money. But yeah, the system is, but that'll get re-equilibrated. I mean, as this change that I'm describing takes place, the monetary premium in housing will go away. And those who decided to hold Bitcoin versus housing will be able to buy plenty of house, in a few years. You're already starting to see that. I mean, housing prices are soft all over the place. So, and I suspect they're going to get much, much softer. So you're going to be able to buy your house, but it's obviously in the shorter term, I would advise anyone who's young right now to rent, not buy. Because I think on a relative basis, I mean, I'm sure you've seen, in fact, I had it in the book. I'm sure you've seen that meme that shows how many Bitcoin it took to buy a house, right? Where the average housing price has gone up substantially, but the number of Bitcoin necessary to buy a house has gone down substantially, for the past 15 years. So look, Bitcoin is honest money driven by math. And, it's the most honest form of money mankind's ever had, because there's no dilution in it. Even gold gets diluted at 1.7% a year. And the book has a whole chapter, where the title of the chapter is "Sound Money is a Moral Issue." And it really is true. I mean, there's a lot of history to support that. I mean, people in the Bible, this is thousands of years ago, they were writing about honest weights and measures, because, the history of people messing with the monetary system to try and get advantage, this has been around for a long, long, long time. Fiat currency has abused a lot of people over many, many years. This isn't some new problem. It's kind of new and acute right now, getting more acute, post 1971, and as we go into this whole cycle. But, I think what will happen is, the broken money like we have, fiat money like we have, leads to fiat sort of behavior, gambling and, bad morals, and not thinking about the long term, and, just kind of spending your seed corn and cheating to get as much as you can, as quick as you can, because you really don't care about tomorrow. Whereas, sound money people very much believe in investing and being patient, and, you plant a seed for a tree, and you watch it grow, and you don't chop the tree down just to get the wood when it's a couple years old. I mean, and so to me, money is all about kind of reaping and sowing. I mean, you've got to reap savings, and then ultimately you'll sow the benefit of those savings. Of course, you won't if you're saving in fiat terms, because the government's going to rob you.
The stock market, currently at historic highs, has limited upside as inflation continues to rise. The surge in the money supply since 2020 has fueled persistent inflation, eroding the value of traditional assets like stocks and real estate. As wages and inflation climb, Bitcoin emerges as a promising alternative, offering a safer store of value in an increasingly unstable financial landscape. For those new to Bitcoin, it's essential to understand its volatility and avoid chasing price highs. Instead, focusing on long-term holding and dollar-cost averaging is the recommended strategy. With Bitcoin's potential to reach $1 million per coin within the next decade, it presents a compelling opportunity in an inflationary world. Currently representing less than 2% of global assets, Bitcoin's growth potential is massive. As the best form of money ever created, Bitcoin is poised to reshape the financial system. It offers a bright and secure future for those who embrace it, making it an asset worth considering for anyone seeking long-term stability and growth.
And I think it's really important and incumbent upon all senior Bitcoiners, or people who've been in it a while and they're trying to orange pill their friends, to explain to their friends what this asset is and how volatile it is in these early days of adoption. And the only way, as you and I both know, the only way you really get hurt in Bitcoin is to chase a new price high, to then have it go over the top of the cliff and go down, 20, 30, 50, in the worst case, 70 or 80%, but I don't think we'll see many of those anymore. But I mean, 50% down seems entirely doable to me, from any level really, and then to sell, because the cycles tend to be about 4 years, and everybody who's been in it over 4 years is in the green, has made money on it. But but it's sad, and some people just don't understand that. And again, it's having a long time preference, and so it argues for dollar cost averaging. It argues for buying it when it's down. I mean, you can, how expensive it is. There are models that you can use to look at that. What multiple, how far above or below its 200-day moving average is it? I mean, when it's below its 200-day moving average, it's obviously tends to be on the cheap side. When it's way stretched above that, it can be a little bit ahead of itself. And so one would say that the best way to get involved. I mean, right now it's below its 200-day moving average, I believe. I'm not 100% sure of that, but I think it is. And so it's probably a pretty good time to be buying right now. I mean, the power law model actually, I think, has some predictive capability. I mean, there's a 97% R squared on looking backwards on the price there. And I think the power law has it today. It should be at about 97 as fair value. So it's 82. You're buying it at a discount, and it's the nature of the asset. I mean, I suspect, in this run, it's going to go to 200, 250 sometime in the next year and a half. And then, by the way, it'll get overextended and it'll come back down to 125, it'll lose half its value. I mean, one thing that has happened, and I think it'll continue to happen as it's more widely adopted, is that the fluctuations will not be as large. I mean, in the early days, I think there was one drawdown that was almost 90%. I just can't see that happening anymore. I think that, and there were several that were 70%-ish. I think that even those probably are unlikely. But, when I advise somebody buying it, I say, look, buy what you can live with for a long period of time, i.e. 5+ years, and understand that if it goes down 50%, the correct move is to double down, not to sell it. Or if you don't want to double down, fine, but just hold it, because as you and I both know, it continually hits higher highs and higher lows. So I mean, obviously better to be buying during one of those low periods. But if what we're talking about here is an asset, particularly you're young, that you're going to hold for 20, 30, 40 years, I mean, if these are going to be worth $1 million a coin, and I see that happening within 10 years easily, does it really matter if you bought it at 80 or 96 or 105? I mean, all three of those prices are at $1 million a coin are going to look really good. So that's kind of my advice. Another thing I say, I mean, on making the case for buying it, the two other things I use, because I encounter, I have a lot of friends who are, fairly well off, and I've tried to convince them to buy it. And some I've been successful. Most of them I haven't, to be honest with you. Most of them think I'm nuts. And what I say to them is, I say, look, guys, if the financial system is the Titanic and it's going down because the government's out of control and they can't stop printing money, which is what the book talks about, and Bitcoin and gold are lifeboats, and Bitcoin's the best lifeboat. Okay, so I paid 10 grand for some seats on the lifeboat. I paid 400 for one seat or two seats. And I recently paid 70 grand for another seat, whatever. Okay, the price to you today is 80 grand for a seat. So you can either stay on that Titanic or you can buy a seat for 80 grand. Do you care that I bought some at 10? I mean, look, Max bought a bunch at 2, and I'm jealous as can be about that. But, I wasn't smart enough to see it back then. I didn't do that. So be it. I mean, everybody feels like they pay too much for Bitcoin. And everybody feels like they don't have enough Bitcoin. And yet, wait 10 years. And people are going to look at you and like, holy shit, you bought it $80,000? That stuff's worth $800,000 a coin. You own a full coin? Oh my God, that's stunning. I mean, that's going to be the progression, in my opinion. So the other thing I would say that I like to emphasize, again, in the book, is the chart by Jesse Myers. It just shows how early we are, right? There are $900 trillion of financial assets in the world: stocks, bonds, real estate, cash, all that stuff. Bitcoin is less than 2. In fact, I checked this morning, it's like 1.6. But at 2, it's 0.2% of all the financial assets in the world. It could go up 10x, i.e. we could go from 80,000 a coin to 800,000 a coin, and it would still only be 2% of all the assets in the world. I mean, really? I mean, it's
so early.
Yeah, we're really very, I mean, on the big scale of things, if this is the best form of money that mankind has ever created, and I believe it is. I know that sounds hyperbolic, but it's not. It's a technology that it's a form of money that cannot be diluted. We've never had that before. Let me emphasize, never had that before. It's new, right? A technological innovation. If that's the case, if it's the best form of money that's ever been created, why shouldn't it become the most valuable form of money ever created? I think it will. So, that's how I see it.
Bitcoin's recent price fluctuations have traders divided, with some predicting a potential drop to $65,000 following a 14% rebound from a 4-month low of $76,600. Despite the rebound, Bitcoin has struggled to maintain upward momentum, encountering bearish pressure at the $87,470 resistance level. Technical indicators, such as the dark cloud cover and a strong rejection at higher levels, suggest further declines. A break below key support levels could send Bitcoin testing the $65,000 to $74,000 range in the coming month. From a long-term perspective, analysts suggest focusing on Bitcoin's fundamentals rather than short-term market volatility. The cryptocurrency's inherent volatility is a natural part of its adoption process, particularly in its early stages. For those navigating these fluctuations, the recommended strategy is dollar-cost averaging and holding through inevitable dip. Despite potential corrections, Bitcoin's value is expected to grow significantly over the next decade, with the possibility of reaching $1 million per coin. As Bitcoin's adoption continues to rise and inflation pressures mount on traditional financial systems, its role as a store of value becomes clearer. Often seen as a lifeboat in the sinking ship of traditional finance, Bitcoin offers a safe haven for those seeking to preserve wealth in an unstable economic climate. Do you think Bitcoin's long-term trajectory remains bullish? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.